What's up, guys? It's October 24th, 2024. Do a breakdown of the E-mini. It was a range day. Very difficult. I was up nicely and then I just got torn to bits. Let's talk about the daily chart, as always, and the 45-minute. I hate this triangle. Look at that. That's breakout mode. Breakout mode is when we have a double bottom and a double top. So here's that double bottom, higher low, double top, lower high, right? And then again, we can see that right here. We can see expansion, contraction throughout every chart, every time frame, it is just a fact of the market. Something I don't talk about is first principles. I've actually never mentioned first principles before. First principles deserves like a 2-3 hour lecture. First principles means what is the most basic principle of what. So there's first principles in every modality. There's first principles in weightlifting, there's first principles at your current job. There's first principles as being an electrician. The first principle in trading is the market is either breaking out or reversing, and that is tried and true. Some might say that's not true, but I mean, look, is this breaking out or is it reversing? Is this breaking out or is it reversing? So, and those are two first principles. So first principle one, it's out. First principle. Oh, what the heck did I just do? Did I delete that? Okay. I am having a little glass of wine tonight. Don't sue me. Principle. Apparently I can't spell breaking out tonight. Breaking out. Second first principle. So what does this even mean? I'm drinking red wine. Do you guys like wine? I drink a lot. I prefer wine over. I'm partying. I'll drink liquor, but I used to be a bartender and I drank so much beer. I just can't. I don't like it. I'll do it if I have to, if I don't like it. So first principle, market is breaking out or market is reversing. Yesterday we had that breakout. And first principle, again, price action is fractal. That's another topic, but so here the market is breaking out. And then here, the market is range bound. And what makes it challenging is that they're traded differently. Breakouts we take with trend, and reversing, we want to buy strong bear bars and sell strong bull bars. So just take 13 for example. It's a great bull bar, but bears made 1R before bulls made 1R. I want to keep this on the screen, but just kind of just cantered off to the side. What font? Why? My computer's kind of glitchy today. Some is mad weird with my computer. Oh, it was because I had the pen tool open. So I'm just gonna keep this canter to the side. It's not that important. It is extremely important. I just wanted to just leave that there so you guys can see it while we're talking. So the market's breaking out, that would be expansion. The market is contracting, that would be range bound. So we have an expansion and now we're going range bound. So we expand, contract, expand, contract, expand, contract, expansion, contraction. Even if we want to break it down even more, expansion, contraction, expansion, contraction. My computer's lagging. Expansion, contraction, expansion, contraction, expansion. We contract, we expand again, we contract back. So the first principles are always at play, no matter what, any time frame, any market, any breakout, range bound. That's just something. So we talk about price action. I just think that should be important. If I'm going to be doing these things, you guys are going to continuously show up. We have to have a proper base. We want to build our base wide, very strong, very stable, and then vertical. Bar one, we have a gap up, and then a big bar. Bar one being a bear bar. That's bad for the bulls, good for the bears. What is bar 2? It's that contraction, so it's range bound, right? We're going more range bound. We go sideways for wow, 24 for 2 hours. We have a breakout mode pattern here. The triangle. There's that. Remember I talked about double bottom. So we have a double bottom. It's a higher low, higher low. Then we have a higher high, higher low. Excuse me, lower high here, higher low there. Same situation. You see how 2 different charts show the same thing? This price action is not this price action. This is yesterday's price action and today's price action. I'm trying to show you guys fractal price action, expansion, contraction. So excuse me for flipping. Just leave a comment if you guys are understanding, or if you're not, please let me know. This is extremely important. You have a strong base, because now I'm starting to notice the same people are showing up, and I just okay. Here we go. So we have a strong channel 5, 6, 7. Let me reverse. Bar 1, bear bar. Bar 2, pull bar. It's pull back 3 and 4. Get that second leg. So now we have a leg 1, pull back leg 2 for the bears. Leg 2 don't have to be symmetrical, guys. That took me a very long time to understand that concept. It just has to go 1 tick past the prior swing, and it did with a bar 2 and 3. Excuse me, 3 and 4. We got a rally. I think this rally was strong enough to get its own second leg, and I actually bought bar 11. Got trapped pretty bad. I saw 13 and thought we would test the high here, so I held for a couple more points, and that greed ended up costing me about 5 points. And well, I got here and I got out here, so 4 or 5 points. Too many points. Yeah, it was 5. I remember it was about 25. I trade micros. I trade the E-mini once in a while. Bar 13. Are you guys eager to buy that or not? You might say yeah, but what is it breaking out of? It's breaking out of, sure, it's breaking out of 8, 9, 10, 11, 12. But is it breaking out of, what is that, 7's high? No, it's not breaking out bar 1's high. So we have higher lows and we have higher highs. Breakout mode, wait for the breakout. Breakout points get retested. Look at the pullbacks between 20, 21, 22. We're testing the middle of the triangle and it sells off for a few legs lower. This is actually where I started to get shredded. Nah, that's not true. I was scaling in nicely. I shorted 18, shorted 24, shorted 31. And I honestly thought we were gonna be a broad bear channel for the day, like this kind of nature. Maybe a little bit expanding. My target was the high of 58 because bad breakout bars get retested. Not in this case. So what are we doing right now? Right now the market is breaking out 24, 23, 24, 25, 26, 27. It's a breakout. Now we're going to start to contract. We see a big bar 29, 30. This is bigger than what the bears would like, especially, and me being a bear, I was not happy that 26 got retraced to the high. Did create a double top, so that's good for us, but you don't want to see a bar like 20, did I say 26? Excuse me. A bar like 28 get retraced. You know, a 50% pullback is acceptable, but 100% pullback? When do we see 100% pullbacks? Did 100% pullback happen here? Yeah, it did. It happened when we were in the range, and it broke out, and we never saw 100% pullback again. 50, we saw 25 and 50. So you can use pullback depth to judge the price action, which is great. I do all the time. 25%, we're in a trend. 50%, we're in a trend. 75, 100%, we might be range bound. Bears get there, few legs lower, leg 1, pull back leg 2, pull back leg 3. We have a wedge bottom. Why did yesterday's price action sell off and today's price action go range bound? Well, yesterday we had a gap down. Today we had a gap up. And you might argue, well, look at 12, 13, 14, 15. Yeah, that's right. But look at this. 13 is above the EMA. This is below the EMA. Context is different. Now we have trap bulls here. You see? And what do trap bulls do? They buy more lower. They scale in. They scale in an average bar length. They scale in on pullbacks. They scale in on strong bear bars. They're not going to, institutions aren't going to take a loss. They're going to scale in and then pop out. Pop out and pop out. Sometimes you guys listen to Kendrick Lamar. So we see these 3 legs down, really strong bear bars, and we get trapped. I got trapped. 34 inside bar, 35. 36, 30, 37. Excuse me. Unlike bar 13, look at these 4 bars. No overlap, and they're breaking far above the strong bear bar. So this breakout is better than this breakout in comparison. What happens after a breakout? We contract. Look at 37, 38. Excuse me, my numbering's off today. Look at 38, 39, and then we get a bull bar, 40, pull back, 42, 43, and then we go sideways again. Let's pretend this price action never happened. Let me see if I can hide it. Just for the sake of this conversation, let me see something. If these 1, 2, 3, 4, 5, 6, 7, 8, only 9 bars, okay? If we hide these 9 bars, look at the range. Do you guys think this is a trend or a trading range? Kind of wild how these 9 bars can play a big role. So for this half of the day, for 6 hours, you know, it was a range bound price action. There we go. That's what I'm trying to do. You see, this was the box. It was a buy low, sell high play, and if you're a breakout trader like me, it's not our day. I had many opportunities to scalp out, but I was being stubborn. And the reason I'm pointing this out is because I ignored the second one. The market can be reversing or range bound. I got hooked on Phonics. No, I'm joking. I got hooked on profits yesterday, and I just disregarded. I traded what I wanted and not what the markets gave. We weren't range bound, so it's buy low, sell high. The breakout, the way you buy low, sell high is you look at for previous breakout points. So a previous breakout point would be the low of 39. That gets tested here, and then we have another breakout point above this bar. Hold on. You see how so this is the next breakout point, 38. It gets broken out, it gets tested again, and we rally. The rally has a lot of overlap. All the gaps are getting closed today. We have gaps here got closed, gap here got closed. Every gap got closed. This gap stayed open. Let's see the overnight session. So that was the bars, and it got closed anyways. Overnight sessions right here. It's range bound. It's like 2 points. I'm trying to point out how we can avoid what I did today, because I was up about, I scaled in heavy. I scaled in here. I scaled in 4 times within this price action, thinking we were going to get a test of this. And I was very stubborn, and I didn't let out, and it just ripped it. It reversed my profits, and then I tried another short, and then I tried a long, and then right here I was like, oh my gosh, it's ranging, and I walked away. But the point is, we had a big down, a big up, a big down, a big up. We had an expansion. Day trading is very difficult, so we need to learn to read price action to anticipate. I said that wrong. We don't want to predict the future. We want to react. We see a bar print and we read the previous bars and we know what's going to happen. We saw a wedge bottom here, like 1, pull back like 2, pull back like 3. Wedge bottom, 33, 34 is testing the previous breakout point here. And we rallied for 4 bars and then went sideways. All these bears are getting trapped and forced to hit out. I was one of them. I got out for a few points lost and then shredded. Are you eager to buy this? If you're eager to buy this, that's okay. But just know you might sit through a pullback because you're going against the bear trend or a sell-off. And the more bars we get in a row, the higher the probability is that there's going to be a pullback. I hope my neighbors are having a little get together outside. I hope you guys can't hear them laughing. They're really cool people. It's hot out, so the window's open. Then we get that wedge top. So just how we have a wedge bottom, we have a wedge top. It's really important we respect wedges and trading ranges. And when I say wedge, I like to say that's trader slang. When I say wedge, you have to think, okay, we have 3 failed breakouts in that direction. So I say bears got a wedge. Oh, that's 3 failed breakouts to the downside. Bulls got a wedge. Oh, that's 3 failed breakouts to the upside. 1, 2, 3. Failed and we went sideways. Where's the bear wedge here? 1, 2, 3. There's an overshoot. Where's the wedge here? 1, 2, deep pullback 3. In trading ranges, it's important to count implied legs. So trade implied legs would just mean like wicks, smaller time frames. Let's go over not a lot of one-to-ones today. Turn off the price here. When I'm back testing, I have prices on. If you shorted one, you act and put a stop above it, you actually would make 1.5R before your stop gets hit, but I would scalp out for a small loss or small profit and wait for a breakout or sit out, or sometimes the best thing you can do is take a loss. There's one-to-one. No one's really making one. You want to get one-to-one here. You can buy the pullback. You get one. You don't get one-to-one here. You don't get buy the high like I did. You don't get one-to-one. You buy bar 12. You get one-to-one. That's great. If you're in tune with that, that's great. You know, in the trader room, we're taught that breakout mode. Just wait for the breakout. This is breakout mode. The apex, the middle of the triangle is going to get retested. And it does with bar 22. So now we have some sort of price action. We have tradable price action. We have 4 bear microchannel breaking out of the breaking below the EMA. This was a good trade. Put it on the high of the pullback if you want. Put it here. Put it on the breakout. You would get one of these 4 bars. And look what I did. So this was racing as my PT, and I dropped my price line, and I wanted to trade this second leg here. So I went like this. And then I put my thing right here. So I'm pretty sure I did like this because it was very close to coming to, it was very close to coming to my PT right here. And that's how I got trapped. It came so close and just reversed. I was like, wow, I can't believe that. So there's your multiple one-to-one, 1.51 R here. Got that. That's a good one. Here's an implied leg low of 25. Put it to the high here, or you short that low here, you get one-to-one. You don't get one-to-one of this leg. Excuse me. Put it to the high here. You might get one-to-one. Just so you guys know, if you guys are trying, like I'm trying to trade, or if you're not, that's good too. When I put my limit order here to take profits, I put it 1 tick above. So I actually don't think you would get filled 1 tick above either. In trading ranges, that's a characteristic because people in trading ranges, the always in direction is always flipping, so people are more inclined to scalp. And that's why you always see it just barely touch your profit and then reverse because people are scalping out. They know it's going to reverse. We're in trading range. When the EMAs line up, that's an indicator that we could be going range bound. So we'll put this here. Put that up there. Very deep pullback. Not good. Bulls that bought the high of 30 are going to buy more lower, and they're going to make money. Now we have a strong bull leg with a pullback. Put that here. It is not met at all. Oh, wait, is it? It's not. When we have trading range days, the opening is always going to be a magnet. So if you suspect the days of trading range, put a line at the opening, and that will be your target later in the day. So, looking for a trading range. Okay. Here's the open. Look, we oscillate above. Look how much the opening got played with. Especially here, it was a magnet. We have a trading range day that opens here. Opening became support, but you could trade to the open. So if the opening was the mean of the day, you could trade to it. I'm reluctant to say that because I don't do that at all, but that is how you would trade our trading range day. I'm a breakout trader. I stick to my micro channels because this is how you lose money if you keep switching your trading style. And that's not to say that you can't make money here. You can still scalp out. Here is your leg 1. You recognize this is a strong leg that actually get continuation. And then here's your wedge top. So that doesn't, just because you don't get one-to-one doesn't mean you can't trade this. It means you have to you have to calibrate your expectations towards the bars. That's what yesterday put me in greed mode. I'm not gonna lie to y'all. I can't front like I'm profitable every day. Yesterday made me super greedy, and I think I didn't recover as fast as I would have liked to when I got tore up here. Again, I trade price action. by Al Brooks and Ali Moinoff. Sorry, I'm in his classes. I love them. They're great. I suggest everyone start at Al Brooks, take his course, and then trade Ali's way. Take Ali's courses next year or this year, or buy some courses. Here's another 1-to-1. We have a 3-bar bear micro channel. You put it at the pullback. Get filled on 66. Very hard because you got short above the EMA. That's another one of my rules, is I only short below and buy above. So you can see how today's a really anti-breakout day for traders. It's a whatever day for us. 66, strong bear bar, no continuation. Bulls make 1R. Right away, just look. 13, bears make 1R. 28, why 28 so good? How did bulls make 1R first? It might not be that good. And then again, we go range bound for the rest of the day. We're just trapped in this box. Very challenging day. I'm going to delete these and I'm going to draw in the gaps so you guys can see how gaps are getting closed. Because yesterday gaps stayed open. So today gaps are getting closed. Do you guys want to do purple just to mix it up? Or we could do red because I'm drinking red wine. It's just 1 cup. So there's a gap. There's a gap. No gap here on the biggest bar. You guys got to really pay attention to how the market reacts around big bars. But now look at here. Bulls get some gaps and they stay open. It's an indicator that the day is a little more bullish. There's a little more bull sentiment. Again, higher time frame play. This is going to be crazy. Hold on. Okay. Again, the higher time frame says we're bouncing off the EMA. We're going sideways. And this gap gets closed on 55, but then these two gaps stay open. There's a gap here, but I think it gets closed. This gap starts to act as support towards the end of the day. Very challenging day. Good on you if you made money. If you didn't, don't worry. It's a character building day. Days like this just strengthen our resolve in the trading markets. I want you to just take some time and really think about first principles. You know, just go try and prove this wrong. Like, prove that this is not true. And then as in return, you'll realize how true this is. First principles are extremely important. Anyways, guys, if you learned something, share the show, tell a friend. Hope you guys learned something. Hope you guys don't find me annoying today. Today was really slow price action, really range bound, so I tried to change it a little bit more about lessons than just context, but there were still trades on the screen. It's just trading range days, it's a lot of patience for a little profit. It's just keeping floating money. Lunch money, no steak dinner tonight. Anyways, guys, you have a good one. I've been rambling a little too long here. You guys have a good one. Thank you for your time. Thank you for always showing up. I appreciate your support. If you learned something, share the show. Don't be a hoe. Have a good one. I'll talk to you guys tomorrow. Bye.